Good morning, everyone, and thank you for attending the full year results presentation for the year ended 30th of June 2020. Just a quick recap. We provide a technology platform for marketers to use in the mid-market to allow them to bring data into the platform, use that data to get relevant, targeted, and where they can send highly personalized campaigns and orchestrate all of their customer journeys through the platform. And give them all the channels, whether it's email or other mobile channels, social channels, to deliver those messages on based on the sophistication of their marketing strategies, as well as how the recipients would like to receive their communications. In terms of a bit of background, formed in '99, we are a global business based out of three main hubs. UK is our hub into EMEA, our New York offices is our hub into North America, our Sydney offices are our hub into APAC. And when we describe hubs, it's every single department within region that you can really scale from, setting those foundations for other territories and other offices that we may open to scale. We have 340 employees globally, 13 offices worldwide, and a very strong tech ecosystem, very much focused in mid-market, but the platform can be used by smaller businesses that are graduating from a small business platform all the way to larger enterprises that are rolling out the platform across many divisions across the globe. Strong trade body organizations that we associate ourselves to, and a lot of key integrations, especially where marketing is playing both in e-commerce, into CRM and other tech platforms itself. So if we look at where we are and some of the customers that we help, we span across household names as well as business names that people would recognize, all the way down to customers that people may not recognize, but are doing great stuff in the space. In terms of looking at our 10-year revenue CAGR, that's up 23% on a compound basis. Strong profitable growth coming through, 10-year CAGRs of EBITDA of 28%, and strong EPS growth over that 10-year period. If we look back at the three organic growth pillars we always talk about, geographic expansion, we can continue to see international accelerating, and that continues to deliver on our vision to diversify more revenues outside of the UK. And that continuous monetization of functionality through licenses, data, and bolt-on functionality, as well as messaging recurring coming through from a business model perspective. And we can also see the take-up of our strategic integrations that we have, both within e-commerce and into CRM, continuing to go up. I've always described the business from both a people and a platform basis. I think people are absolutely important. The culture that we create has definitely helped in the success of the business, and it continues to do so as we look forwards. Predominantly, we have people in IT and development, sales and marketing, and then a small client services team that help deliver on the vision of our clients. So part of what we've been doing over the last year is continuing to strengthen the PLC board, both from a corporate governance perspective, but also enhancing the skill set to take us from where we are today to that next level. So we had Mike that joined us earlier in the year. We've also got Liz and Boris as well, and you can see some of the background and companies that they've grown to that next level. So for us, we've got a well complemented board along with the management team as well. Going back to our organic growth pillars, we've always focused and we continue to focus on three main pillars: product innovation, strategic partnerships, and geographic expansion. And we continue to do that through expanding the product suite, making sure we're building functionality not only for today, but also functionality that keeps us ahead of the competitors, as well as what's coming down the line, working with the likes of Forrester and Gartner, and making sure we're continuing to educate our customers in adoption of that platform and how they can enhance their marketing strategies that they have today. We continue to focus on cross-selling, both into the existing customers, but also as we look forward, it's building that deeper customer relationships, growing our customer base globally and increasing our global market share from a presence perspective is high up the agenda, with now hiring into North America a management team that has helped build businesses within the North American region, but also solidifying foundations in our core business. The other area is deepening our strategic partnerships, both from a relationship perspective, but also a go-to-market. And as I said, people make our business successful. It's continued to globalize that talent. So we're very much focused on organic growth, but not afraid of growth by acquisition. It really has to make sense for us to do an acquisition from a business perspective. And like we have with the organic growth pillars, we have 3 acquisitive criteria. 1, to help us from a talent perspective in regions that we want to operate in, where we've started to dip our toe in the water and want greater market share. Secondly, synergy technology that really help move the platform on significantly, which would take us a multiple of years to build, or through the ecosystem that we've built from a partnership network, where we can see existing clients buying that functionality that we may be missing today, or what helps us complete that proposition from a new customer acquisitions perspective. So in terms of FY19-20, a bit about COVID-19. We quickly and efficiently transitioned to working from home. So we didn't have much disruption. Everyone moved to supporting our clients, continuing to acquire new customers and helping our existing clients grow and deliver on their vision. In terms of new business, we did have a brief slowdown during March and April, where the lockdown first came in, but that was our prospects, as well as some of our existing customers, really adapting their business models to the ways of working from a lockdown perspective. And then we started from May, June, and into the first quarter of the new financial year, we started to return to some form of normality in terms of not only existing client growth, where customers are spending more, sending out more messaging and getting more sophisticated in the functionality that they're using, but also with the new customer wins, using multiple channels, as well as coming in, starting with a higher level of functionality. Other areas, we've had robust cash collection through the period based on the diversity that we have within the customer base, in terms of industry types, in terms of size of clients. We've continued to retain all colleagues within the organisation and have not had to use any of the government support schemes, which I'm pretty proud of. And we're seeing good sales momentum despite uncertain markets. Obviously, we'll continue to monitor that situation. We don't expect high levels of impact from the second lockdown. I think a lot of the business models out there have adapted to the lockdown from 1.0. We're seeing increased levels of messaging. We're seeing increased levels of digitization as well. In terms of key messages, we've continued to see that double-digit organic growth coming through. We've seen adoption of platform continuing globally, both from an international market perspective as well as domestic. In terms of increase for demand for Omnichannel, that's increased post-COVID as people start to create more experiences or engagement at every touch point that they have with their recipients. We're seeing continuous investment to solidify the foundations, but also allow us to scale from the international hubs that I talked to you about earlier, increasing investment around the strategic partnerships that we have, and also the product side of things as the world of data becomes more important. In terms of other areas, we've continued to strengthen an already strong financial position with a healthy balance sheet and a strong cash position. And we've got a high level of confidence with the recurring revenues that we have from a transparency and visibility perspective, for a positive start, but also confidence as we go through the year. So in terms of strategic progress and looking at the first pillar of organic growth, product innovation, we've continued to monetize the value in the platform. We saw functional recurring revenues grow 16% to 14.4 million in 2020. It now makes up just over a third of all recurring revenues, and that's been a path that we've had and a vision that we're continuing to deliver on. We've seen a lot more use of data within the platform. We've seen a significant increase in the data that's being brought into the platform as marketers get more sophisticated in not only segmenting the data that they have and using that data, but from a relevancy and personalization perspective. So if we kind of look into a bit more detail, 23% of our customers are using more than one channel, where heritage of the business was email, but they're now starting to adopt the Omnichannel. We're seeing a lot more sophistication in the AI and intelligence that we've built within the platform. We've seen customers recover 245 million in the last year from sending out campaigns through the engagement cloud. We're seeing average revenue recovered by e-commerce merchants. We do have 50% of our customers that use it on a B2B basis. From a marketing perspective, we have 50% of our customers using it on a B2C marketing basis, of which around about 20 to 30% use it from an e-commerce perspective. And as I mentioned, we've seen a 300% increase in data that is being synced into the platform as well. In terms of other areas, we continue to focus around data intelligence and joining all that data together, as we've seen an increase in both demand for platforms that have data capabilities, but also the use of data from an adoption perspective. Other key elements, we've enhanced our user interface, so it makes it easier for our customers to use both the data, but all the orchestration functionality that we've built and the channels. As I mentioned previously, marketing messaging and transactional messaging is coming together. It's all about creating customer engagement. So we've bolstered up the transactional email and messaging capability within the platform and introduced concepts of loyalty. So a lot more of our customers are not only doing marketing campaigns for customer acquisition, they're also enhancing their retention strategy from a messaging perspective. And we've also built out further on the omnichannel functionality as we start to continue to see that upward trend in terms of adoption of new channels. In terms of product vision, I talked a little bit about some of the investments that we are making. We're doubling down this financial year on the data capabilities. So some of you may have heard customer data platforms, data management platforms, CRM. So we are an extension to the CRM through the integrations that we have. But from a capability perspective, we're enhancing our customer data platform perspective, which allows our customers to create an in-depth single customer view of the data that they're bringing in, but allow them to have that better relevancy, targeting, and personalization of content. So as we look into the future, not only do we have a robust data platform, we have the ability to create all the campaigns, both from one-off campaigns, as well as from a perspective of AI, machine learning, content personalization, but also with what we've already integrated through the acquisition and enhanced as we built out from an R&D perspective, the channels that we have available in the platform for our customers. For us, it's about building a platform that allows you to deliver the right message to the right customer through the right channels at the right time, which allows our customers to put their recipients centric to their marketing strategy. So if we continue to move forwards, in terms of strategic partnerships, which is another pillar of growth for us, we've continued to see strong double-digit growth through strategic partners in the integrations that we've built. We've continued to see an increase in new customers that are coming on board with an integration of some sort, as well as existing clients adding more integrations. One, it makes the client base stickier. Secondly, the ARPC or ARPU is a lot higher than the general book of business, as well as the marketeer is a lot more sophisticated in what they're trying to do through the platform. We're seeing revenues not only grow in the Magento side of things, but also some of the newer integrations that we introduced to the market around about 12 months ago are now starting to feature in that pie from an integration basis perspective and the use of that. In terms of other notable areas, we were named BigCommerce as a lead partner, and that's helping with the go-to-market strategy together, but also a deepened relationship from building out the integrations more deeper. We became Shopify Plus certified, so we're piggybacking on the coattails and the success of Shopify within the e-commerce space. We've continued to enhance the sales and marketing that we're spending from an investment perspective with a strategic relationship with Microsoft, where we're now starting to build brand awareness. We're also building a community around the Microsoft side of things, as well as expanding the focus within the North American region and the APAC region to take more customers on board using that integration. So if we look at geographic expansion, we're seeing strong growth in the APAC region. That's a continuation of not only the Australian, New Zealand market, but also into Far East Asia. We've seen strong growth in the North American market and also within the EMEA market as customers start to adopt Omnichannel, as well as more messaging from a digital experience perspective, even with some disruption in Q4. We've also enhanced the management team within the US market by bringing in a new GM through the period. We've introduced a new head of marketing and also a head of sales that have got Adobe as a background, but also they've worked for the likes of people like Oracle, SAP, and larger tech businesses that can really bring that skill set and help deliver on the strategy or implement strategy within region. So we saw international revenues grow 20% and now represent about 14.8 million. You can see some of the clients that we won in region as well. So I'll pass you over to Paraag to just go through a bit more detail around the financials.
Hi everyone. So this is the usual charts that we show regarding the long-term CAGR for revenue, EBITDA and cash. As you can see, they continued their upward trend. So if we look at the year just gone, some key highlights here. So revenue grew 12%, as Milan's mentioned. We now have 91% of our revenue as recurring revenue. That's up from 89% the year before. Functionality revenue continued to grow, again, as Milan mentioned. International revenue continued to grow. So functionality grew 16%, international revenue grew 20%. It now makes up 31% of group in terms of revenue that comes from outside of the UK. And that translated into an 11% growth in adjusted operating profit. Milan also talked about average revenue per customer. That grew by 12% in the year as well, with our average customer now spending £1,083 a month with us. The pandemic also has contributed in some way to a higher level of messaging volume growth as well. Communication, and particularly digital communication to a customer base, both from a B2B and a B2C perspective, has accelerated. And Milan will talk a little bit more later in the presentation around some of the macro trends, but that led to a 28% increase in messaging volume growth. And all of that has resulted in a strong cash balance at the end of the year of 25.4 million. So looking over just to the P&L itself, I'm just going to highlight a couple of key trends that we've seen. You've all probably had a chance to look at the numbers themselves for last year. But what we've seen is that the pandemic had a small impact in the fourth quarter, which we noted. So revenue for the year was impacted, and hence we only grew 12%. But that has now started to come through. And as you've seen with the two recent upgrades, the one in October and the one that we've done alongside this trading statement, we're now expecting revenue for this year to be, if you look at consensus numbers, 17% growth. But if we see the trends that we've seen in the first quarter and October continue through to the rest of the end of the year, there's risk to the upside. At the moment, we're still being relatively conservative in the guidance because the pandemic itself, we're as anyone is unsure about the long-term impact and what happens from here onwards. Lockdown 2.0 has not had any material impact when it comes to revenue. Lockdown 1.0 did have an impact, which we told the markets in April. We're not seeing that this time round, and hence gives us comfort in that revenue guidance that we've given for the year. And then the other elements to note is we're now in I suppose, a new norm in some ways. So we've accelerated marketing spend to continue to drive that top line as we look forward. And then partner commission is one of the sort of cost areas that's increased, but that's because we're driving increased business from our both the strategic partners and also the system integrators, and agency and other tech partners that we work with. So it's a year of investment, I suppose is the best way of putting it. What we did see is with the top line growth increasing in terms of the guidance that we've given for this year, we're still managing it to the same profitability levels. So all of the incremental profit that we generate from the additional top line, albeit it's lower levels of margin than it would be if it was all email, because the top line is being driven by SMS predominantly. All of that's being reinvested back into the business. As Milan mentioned, some of it into our data capabilities, some of it's gone into accelerated hiring in the regions, and some of it's gone into marketing, etc. So all of this will drive longer term revenue growth higher over a number of periods. Moving on to the balance sheet, I think very simply, it's a healthy balance sheet we have with a strong cash position, zero debt, gives us bandwidth for strategic investments. The one sort of point to note with regards to the adoption of IFRS 16, and I've got a slide on it just in a couple of slides' time, this has led to an additional 1.1 million in the current liabilities and 3.4 million additional in the non-current liabilities from the leases. Strong cash flow again. What we did see is the continuing operations to net cash from operations, EBITDA to net cash ratio is now at 99%. So a very strong year because we optimized cash collection further during the pandemic. So customers who we thought were potentially at risk, but also customers who'd asked for help, we just wanted to ensure that they were fully up to date when it came to their payments. And this was one of the areas that allowed us to further optimize the amount of cash we collected. So very strong cash flow with a healthy cash balance that will continue to increase as we look into forward periods. And so just briefly on IFRS 16, we saw a P&L impact of 72k decrease on the adjusted operating profit and 58k decrease on the profit after tax for the continuing operations. The right of use asset for us was 4.4 million with lease liabilities of 4.5 million. The impact on depreciation was 955k and interest on the lease liabilities 100k. So that obviously helps EBITDA, drives that higher, and so almost 1 million impact from that. But besides that, it's only the office leases here that we're really talking about. We don't have any other leases of note that would impact this figure. So that's pretty much it on the financials. Just in summary, to mention, we have a high proportion of recurring revenues. We have a large percentage of that under contract. We saw strong international growth. We've raised revenue growth guidance again at this set of numbers. And we have the healthy balance sheet and strong cash position, which allows us to invest back into the business to drive future growth in future periods. And with that, I will hand it back over to Milan.
Thanks, Paraag. If we look at what's happening in the marketplace, we're continuing to see that upward trend where traditional marketing budgets are moving into digital. Post-COVID, a lot of the consumer behavior has changed. It's become more online. So we're benefiting from some of the online experiences that our customers are creating. I think marketers across the world have continued to see incredible resilience, but also adapt their business models to that next normal where they are creating more customer engagement. They're trying to understand their recipients and the touch points, both pre-acquisition and post-acquisition from an experience perspective. I think two quotes that describe the marketplace very nicely was one from Satya, CEO of Microsoft. You're seeing a lot of companies where they would have spent 2 years plus in terms of digital transformation, trying to rapidly increase that within the 2 months. I think we're well placed in helping with that digital transformation from a strategy perspective. In terms of other areas, continued interest in marketing automation, making sure they're creating those customer journeys through both from an e-commerce perspective, but also from a B2B marketing perspective as well. And I guess dotdigital, we are a key enabler in making sure that they can create those experiences. If we look at the rise of Omnichannel, we've always talked about, I guess, in Asia, it's a mobile first. So email is then complemented in terms of channel, but everywhere else we've seen customers start to use email and then adopt more omni-channel features. So Email still generates the highest return on investment from all digital marketing channels. For every pound spent on email, generates £42 return. We are seeing that customers get a higher lifetime value when they adopt cross-channel or omni-channel for themselves, and they're seeing a 30% increase in that. In terms of, I guess, medians that you can transact with in-store purchases, they are now starting to become heavily influenced by digital transactions. So there's an increase of about 56%. And I think consumers' buying habits have changed. Not only do they shop on more than one channel, our customers are offering lots of different mediums to transact with their business. So as a platform, I think integration of the omnichannel features that we had through the acquisition of Kamapi has been well integrated. We're starting to see customers using it. We've seen 22% increase in email volume growth year on year. We're seeing more customers adopt automation programs through the templates that we've built, as well as them adapting their marketing strategies. We've seen more mobile messaging growth, over 200%. Also, what we are seeing is more of our customers, through the education that we've done and the adaptation of our customers' strategies, we've got 23% of our customers now using more than one channel, and that continues to go up. So if we go back to the competitive landscape, lots has been happening from a consolidation play perspective. So over the last 2 months, you may have seen Selligent being acquired by CM Group, which is owned by Insight Partners. Emarsys, more recently, was acquired by SAP. Cheetah Digital was acquired by private equity. Acoustic was the old IBM Silverpot business, which was divested out to private equity. So there's a lot more consolidation happening. That makes us the largest independent mid-market marketing automation platform now globally. And what you are seeing is that change of small businesses where we win some of our customers from those small business platforms like the MailChimp. You're seeing that graduation path as sophistication and data becomes more important, as well as you're seeing from the right-hand side, the bigger clouds, larger enterprises now choosing best of breed technologies to really help them deliver on their vision, both from a cost-effective perspective, but also from a quicker to deploy side of things. The beauty of the engagement platform, it can span all the way down from small business all the way to larger enterprise, where we're very much focused on our customers spending over $400 per month to $30,000 per month. In terms of other independent verification of our space, you can see some of the independent reviews that have made us leaders in G2 crowd, but also looking at Forrester Wave. This was our first entry into the Forrester Wave. You can see we've got strong strategy. We're continuing to build from an R&D perspective, enhancing our current offering. So we're well placed and well recognized as a strong performer by Forrester in the space that we play in. In terms of the market, Forrester forecasts that market growing from 3.8 billion to 25.1 billion over a number of years. And we're really well placed in terms of the segment that we sell into to take opportunities of that level of growth. In terms of looking at summary and outlook, our business model has been very strong, and we've tested that through the uncertain markets of COVID. Our strategy remains unchanged, continue to focus on those 3 pillars of growth: geographic, product innovation, and strategic partnerships. We've seen strong trading performance, strong recurring revenues coming through, which a lot of that is contracted, so it gives us visibility. We've continued to strengthen our international hubs from a foundational perspective so that we can continue to scale from. We've continued to build in terms of investment in the relationships with our strategic partners and seen strong progress against all partnerships. Also seeing that great uptake in terms of platform adoption from an omni-channel perspective and continuous delivery against the product roadmap to meet the needs of our marketeers. So in terms of outlook, a clear strategy to capitalize on the market opportunities, of which are vast. Revenue guidance was increased again as we announced these results from a strong Q1 and October results. We've increased investment really to drive the revenue growth, both from R&D perspective and investing in the business, enhancing our data capabilities, but also on that sales and marketing front as we start to look out into the long-term future. We continue to see that CAC to LTV ratio 10 times. It makes sense for us to invest back into the business. We continue to closely monitor the evolving COVID-19 situation, but we feel we've got a strong financial position, we've got high revenue visibility and strong cash generation as we continue to monitor. In terms of long-term vision and value proposition, for us remains unchanged. Strong business model with lots of opportunities that present themselves today. So I'd open up to questions from the floor.
And we'll go to Andrew Darley at FinCap.
What I wanted to ask really is if you could describe the general direction really that you see that there might be gaps in your technology stack, which you think that maybe your competitors offer, and whether you see that as being in order to expand your addressable market towards enterprise, or whether to defend from smaller competitors at the more SME.
Every competitor comes from a different background. Like we have had heritage from email, and that's where we put a lot of R&D in the startup phase and then expanded out. Some people come with, some of the competitors started with data and morphed from a customer data platform. And that's part of what we're doing. We're continuing to invest. We've got 70% or 80% of the feature set that any of these customer data platforms would have. And we're looking, as we look into H2, to enhance our platform so that from a go-to-market perspective, not only are we competing with the likes of data platforms, but also enhancing what we've got specifically for that mid-market. In terms of moving up the curve, we're very much focused and anchored around the mid-market, but we are now naturally seeing brand awareness in that enterprise space. So the platform itself offers 90 to 95% of all the features that an enterprise cloud has. And therefore, people are looking at our platform to roll out globally. So we are seeing an increase in larger value customers that are also coming on board.
And do you see the brand awareness as being restricted by the lack of travel and marketing you've been able to do, or is it a virtuous circle of greater uptake drives greater utilization and greater, or how does it work?
Yeah, I think it's a greater uptake. I don't think our brand awareness has been restricted through not traveling. We're piggybacking on the successes of people like Adobe, Oracle, the integrations that we've got, but also working with the likes of Forrester and Gartner in terms of raising brand awareness through things like the Gartner Magic Quadrants, through Forrester Wave, but also doing our own online events and online push in terms of developing that brand awareness out.
And as the last independent, really talking about the Forrester Wave report you just referred to, as the largest and last independent in the mid-market, do you see that gives you more flexibility against the others? Because often when they're acquired, they'll just become weighed down in the larger bureaucracy of the larger enterprise. Yeah,
I think what we've seen in the past, where people like ExactTarget got bought by Salesforce, when Silverpop was bought by IBM, history says that as you get taken over by a larger business, you do go through disruption, both from a cultural perspective in terms of understanding the mission and vision of where their business is going as a combined business. It just provides more opportunities for us to double down and focus on the key areas so that we can displace some of those clients or competitors from a client win perspective.
Kevin Ashton from N+1 Singer. Kevin, go ahead and ask your question.
Yeah, just a couple of questions. On Dynamics, you've obviously been working with them for a long time, and it's a significant portion, obviously, of revenues and certainly of connector revenues. Are you able to just explain a little bit more what's happened there? Because it sounds like you're feeling quite optimistic about changes and perhaps some changes in the relationship going forward. So maybe a little bit of colour on that, if possible, Milan?
Yeah, no problems, Kevin. So obviously, Kev, you've been following the story. So part of what we had to do with the limited amount of marketing budget that we can create from driving top line as well as profitability, we had to invest carefully in where we saw returns. So part of what we did was really focus on the e-commerce market. From an investment perspective, we're seeing strong returns, and we continue to see strong returns. But I think as we start to put more marketing dollars back into the business for positioning ourselves for greater organic growth, it's an opportunity that has grown nicely without putting much sales and marketing dollars, without building an ecosystem, without really putting out brand awareness in multiple global regions. And part of what has happened is effectively our relationships with Microsoft has got stronger. We continue to do more co-selling into the Microsoft Dynamics user base where it makes sense. We've also developed a strong agency or system integrator network now that is helping us build brand awareness. So we're now starting to put more sales and marketing dollars. In turn, like with previous investments, when you start to incrementally add more investment, we continue to see the returns. So it's probably more capital deployment from an investment perspective in Microsoft Dynamics, but also a stronger relationship as we start to develop brand awareness, not only in EMEA, but also into North America and APAC. And we're working with the strategic account directors within Microsoft to really help us influence the closure of sales.
And I mentioned just one other area. On the average revenue per customer, just over £1,000. Can you kind of update us as to what the dispersion is there? I mean, I seem to remember that Magento was kind of 1,500, and I don't know if they're any bigger and I guess obviously the point is here, sort of where could that go? Can you keep growing at this kind of strong pace, or any quantitative qualitative or even quantitative thoughts?
Yeah, so I guess what has changed in the marketplace is more and more new customers are coming in from an integration of some sort. And what we normally saw was when a customer uses an integration, the ARPUs are normally over £1,000 per month. And that's partly driven by the data that they're bringing into the platform, but also what the customer is trying to do from a sophistication perspective. And they use more of the functionality out of the box straight away when they're coming on board. The other bit we're seeing is year-on-year growth in that customer base. So existing clients are spending more, and that's helping with the ARPU movement. The other area is just general book of business is moving up in terms of year-on-year growth from a messaging capability perspective, as well as data capability perspective, as well as actually more contacts, which drives the license.
But Kevin, just to add to that, if you look at the range of customers, revenue that we have, it ranges from the bottom end from customers still paying us around £200 a month, all the way up to our largest customer now paying us somewhere in the region of £55,000 a month. So that ARPC number across 4,000 customers is really just kind of an average, because when we brought on some of the larger customers over the last 6 months, let's say, some of those will be 5, 10, 15,000 MRR. So it's difficult to say for certainty the ARPU will go up by X%, but the trend as we bring on larger customers, as they bring in more data, is always going to be upwards.
And we have a question from Kay Korschelt from Canaccord Genuity.
Hi. I just had a couple, if that's all right. On one was on the I think messaging growth 28% and revenue growth 12%. Is that just basically mixed, so more SMS and live chat? So I'm just thinking in terms of perhaps ASPs also that has impacted that part of the business, or of the metrics, I guess. And then the second question was around the LTV CAC ratio, which I believe you mentioned sort of in passing is more than 10 times. Can you just confirm that that's correct? Which obviously would be a fantastic number.
Okay, on the messaging volume growth translating into, let's say, revenue growth, I think what you've got to look at is two things. So because of the pricing model that we have, there's three levers in it. One of those being messaging volumes, another being the contacts that a customer has, and the third being the amount of data and insights a customer brings in. So when looking at each individual customer, a salesperson will look at, really they'll look at the area that they're expecting to grow the most, and look at which area they're going to be flexible on when it comes towards pricing. So a 28% increase in overall messaging volumes is also a function of new customers coming on board and existing customer growth. So those existing customers, if they're within their band, they're not necessarily going to be paying more for that. The new customers, they may, they're obviously adding it onto that, but it may be that actually there's more flexibility in what they pay us around the contacts and the insight. It's not always purely around messaging. So I guess what I'm saying is the correlation between messaging volume growth and revenue growth is only relatively small because you've got the other levers as well, and it's on a band basis. So a customer could send somewhere between $1 million and $1.5 million, and they'll still be paying the sort of relatively the same MRR a month, because that's the band that they're paying on. So what we do see though is if you take the combination of functionality revenue, messaging growth, and then the one-off revenue, that obviously contributes to the overall revenue growth in the business. And just to add to that from what you said, what we are seeing is the growth in other channels, predominantly SMS, has been driving top line. But we are also at the same time seeing our existing customers doing more. And the next couple of months, particularly with the Thanksgiving period, Black Friday, Cyber Monday, and also then with Christmas, we'd expect those trends to continue, whether we're in lockdown or not. Milan, do you want to take the LTV to CAC? Or?
Yeah, so I guess what we have been doing is continuing to monitor the CAC to LTV ratio, and that's continued to be around about 10 times. But what we are now starting to do is invest more in the business to take more of the 10 times LTV as we look into the future.
And that's the end of questions. Milan, do you have any closing remarks?
I guess what we are seeing is a strengthening in the business. We're continuing to see visibility in terms of from a fundamentals perspective as we look into the future. And as we've continued to deliver on our 3 organic growth pillars, we're continuing to not only expand within international territories, we're continuing to invest in product from a data capability perspective, which should translate into more revenue. And thirdly, tightening our relationships and working on joint go-to-markets to really take that opportunity. So as we look into the future from where it stands today, I think we're in a good place to look forward and take that opportunity for growth.